Yes, it's hard to believe, but tax day is going to be here before you know it.
Can we just get through Christmas first?
No.
All right.
No, because some of the stuff could be write-offs.
That's true. As we near the end of the year, there are actually some tax breaks you really need to snag right now before they expire. You still have time. It's not too late. Our good friend Joe Bert, the Oracle of Orlando, joining us this morning with our Money Monday topic. Good morning, Joe. Always good to see you.
Good morning, Amy.
All right, so let's talk about some of these tax breaks that we can take advantage of. Where do you want to start this morning?
Well, first of all, I think we should start distinguishing between what a tax deduction is and a tax credit. They're both about to expire. A tax deduction reduces the amount of income that you have to pay taxes on. A tax credit reduces the amount of tax you have to pay. So if you're in the 10% tax bracket, $1 of tax credit is worth $10 of deductions. So credits are great, deductions aren't bad.
All right, that's good. That's a good explainer because we all need to understand that. Let's talk about IRAs. What do you want us to know about those right now?
With the IRAs, in the last 3 years, the government said if you're over the age of 70 and a half, we have to start taking what we call the required minimum distributions. The government says, you know, you've had the money in the IRA, now we want you to start paying taxes. If you're over 70 and a half, and if you give the money directly to charity, not that you get it and then you write the check, but it goes from your IRA to the charity, you get a clean tax deduction. Now the beauty of that is it can reduce the amount of taxes you pay on your Social Security and can reduce your Medicare premiums.
Oh wow, that is good. All right, let's talk the state sales tax deduction.
Well, you know, in the state of Florida here, we don't have an income tax,
right.
So we get a little provision here. Depending on what your income is, you get a flat deduction whether or not you spent the money on this. However, if you've had a big purchase like an automobile or jewelry or something like that, you know, your husband bought you that nice $20,000 Rolex, and you pay taxes on that, you want to take that as opposed to the standard deduction for sales taxes.
Okay, what about real estate? Because obviously we've been having some real estate problems in recent years. It's starting to improve a little bit, but we're still not where we need to be.
PMI mortgage insurance that people pay if their credit is low, if the loan was done after 2006, you can still get that as a tax deduction. And the mortgage forgiveness, the debt forgiveness, you know, if the bank forgives your loan or you have to do a short sale, in times past, or at least up until this year, you don't have to pay taxes on that difference. So that's about to expire. We'll see what happens because they're discussing it right now.
All right, and let's talk about the non-business energy property credit. What is that?
This is when you do some home improvements, when you put in some insulation, some good windows, maybe some air conditioning in your home, you get up to a $500 tax credit. So all those are about to go out the window. We'll see what Congress does this week.
And of course, donate, 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 right? End of the year, this is the time to do it.
You can do it, and even if you pay it with a credit card, even though you don't write that check for the credit card in January, if you pay it with a credit card by December 31st, you get a tax deduction this year.
All right, Joe Bert, Certified Financial Corp. Always great to talk to you, Joe.
You too, Amy.
Thanks for coming in.